This is Anchor Your Retirement with Barb Gulin from Safe Harbor Financial Planning Group. When a part of your financial strategy is out of tune, your long-term goals, your retirement savings, and your legacy can all suffer. With many years of experience in the financial industry, Barb Gulin provides her clients and prospects the information they need regarding Social Security, retirement income planning, wealth management, and much more. Listen in as we address your financial concerns and provide helpful strategies to put you on the path to achieving your retirement goals. And now here is Anchor Your Retirement with Barb Gulin.
Welcome to the Anchor Your Retirement podcast. I'm your host, Barbara Gulin, back after a couple-week hiatus with my co-host, Tony Shore, and our extra special guest today, Milo.
Milo is joining us today. Now he's starting to get aggravated because I'm talking in his ear too loud. Yeah, I don't usually. Milo's never been on the show before.
Yeah, for those of you that aren't watching the video, Milo is a beautiful tuxedo cat that Tony is his person.
Yeah.
So
I'm his person.
So
out. Yeah, he's chilling out and purring into the mic.
See if he'll do that. Milo.
Yep. He's so funny. He's very funny. He just wants to be held and pet, and I'm his person. So yeah, he doesn't let anybody else hold him like this typically. So okay. I'm he thinks I'm his mom, I think, or something weird. But
well, yeah. You know, they all bond. I had a cat that was totally bonded to me. Her name was Mittens, and I bawled like a toddler when she had to cross the Rainbow Bridge. Yeah. So, you know, they all hold special places in our hearts. They show us what unconditional love really can be like.
Yes. Cats are funny though. They'll unconditionally love you when the time is right for them. That's
true. I was going to say cats are a little bit more fickle about that unconditional love than a lot of dogs are.
Yeah, dogs are.
Yeah.
Dogs will love you no matter what. Cats, it's on their terms, but they will love you. So that's good. All right. Well,
in fact, another cat story. Okay.
Okay.
I was in Florida last week, and my boyfriend is like the total animal whisperer. Okay. Like if we go out for walks on trails and stuff, if there is a deer anywhere around, it finds us.
Oh.
And we went out to eat at this hole-in-the-wall restaurant over the water in Destin, Florida.
Oh, wow.
And we're waiting for our Uber to come back. Okay. And from out of nowhere, these two very outdoor, definitely feral appearing cats come out, find my boyfriend, and are like letting him pet them and all kinds of stuff. He is like the consummate animal whisperer.
I have that ability with cats, not with most dogs. And we have a dog and 3 cats. So I love dogs and cats. I'm one of those guys who I don't prefer, but cats, I've went over to people's houses. They will not talk to any guests or come out, and they'll come out and sit on my lap. They're like, we've never seen that. And I'm like, I don't know what it is. It's my sense of, it's my smell or something, or they can sense that I love cats. So
it's that peaceful aura you bring with you. But
yes,
this is not a pet podcast as much as we could make it one.
Right. Sorry, I got us off track with Milo as a special guest.
I totally got us off track. I'll take that one for the team, because I am a cat fanatic, and I'm like, oh my gosh, we have to have the cat on the show. So we'll get back to acting like grown-ups again, much to my chagrin. Okay?
Sure. We're going to talk about important financial stuff now after talking about the cats.
Yes, we are going to talk about balancing your risk and your reward in investments.
Okay.
And we are recording this the week that everybody who did not file an extension, who lives in the States, got to file their federal tax return.
Right.
And unlike 2022, 2023 was a pretty good year for the market. And so they may have been paying more in capital gains taxes than they did the year before, definitely. But as we've seen in the last couple of weeks, the market doesn't go straight up. There are going to be times where the market pulls back and where it corrects. And in fact, yesterday, for those that watch the market and are like chart people, the S&P 500 actually broke through a pretty crucial support level. So people that are chart gurus that try to predict the stock market that way are anticipating us being in a little bit of a correction season here. Now, I don't know whether or not that's true. My crystal ball broke a long time ago.
Yeah, mine too.
Yeah, but for people who trade the fundamentals, the S&P did break through a key support level. So we'll see if that can reestablish itself and it starts to trend back up, or whether we're going to break through that and go down to the next support level.
Sure.
We can see. Anyway, all of that to say that putting all of your financial eggs in one basket or one type of vehicle for retirement might not be the best choice.
Probably not.
No.
Right?
No.
I mean,
and especially for those of you out there who belong to a corporation that's publicly traded, and they do you this benefit where they're matching your 401k contributions in company stock in your 401k, you could be, most likely are, over leveraged. If you've been there for any period of time, you could be over leveraged in that one company stock. And in the industry, we call that single security risk, where if something happens to that one company, think Enron, you could be in trouble if something does happen to that company. Now, we all know that this is a general podcast. I'm not offering any specific investment advice to anybody. If you have questions about how you're invested or how you're leveraged, you can always reach out to us at anchoryourretirement.com. or call us at 913-553-6222, where we can give you an individualized assessment of what's going on. I don't want you to hear this and decide that you have to go rebalance your whole 401k just because I made that one statement. I'm not telling you to do that, but I am telling you that it is something to pay attention to. Make sense?
Yes, it makes sense. And people out there, our listeners and viewers, they need to be working with a financial professional and let them take a look. I mean, you can run a report on their accounts, see where they're at, see how their risk balance is based on what they need and where they're at, right?
Mm-hmm. That's what we do. And that's what I have a team of people for to help me do, so that I can focus on working directly with my clients as much as possible. You know, what we have talked about, the color of money risk analysis, I'd say we bring that up 3 weeks out of 4 in some way, shape, or form on this podcast. And that is something that we can send to you to take. In fact, we'll put a link to that in the show notes so that you can take that quiz. It's 11 questions. It'll take you about 5 to 10 minutes, depending on how analytical or overthinking you are, to get a number somewhere between 1 and 100. And that tells us what your risk tolerance is at this stage of your life. Your risk tolerance changes as your circumstances change, but it's a starting point for us to have a conversation and figure out if you have your investments aligned with what you want your risk to be.
Yeah, and that's important to do. I mean, you can take that risk analysis that you have for people. I encourage our listeners out there to give you a call at 913-553-6222 or go to safeharborfpg.com and fill out the contact form. Mention that you heard about it on the show, and you'll be able to have those reports run. And I know you look forward to hearing from folks too, right?
I do, because, you know, there's certain times where certain products make more sense than others.
Sure.
I was visiting with somebody earlier this week that had heard a tax presentation that we did dealing with taxes in retirement. And the first half hour of our appointment was him talking to me about the experiences that he had had with other people in the financial services industry, where one put him in a series of annuities that and put pretty much everything into those annuities, which, as you know, is not something that I support at all.
No.
And he realized what a mistake that was and actually got out from under those contracts.
That's good.
And then he was talking about being invested in certain stocks and perhaps is probably, like I said, overweighted in some of those stocks, depending on how his risk tolerance comes back. I know that it's real easy to be a bandwagon person and look at a stock like NVIDIA and how it has appreciated over the last couple of years and think that you should put all your money there and that you're going to be fine. Well, not necessarily the case. I mean, NVIDIA saw some trends coming with AI before a lot of the rest of the world caught up with it, and they were able to capitalize on it. But that doesn't mean that they're going to identify the next best thing.
Yeah. And NVIDIA had a big drop before they had a big rise. And they've had a couple of dips since. So they've set some records, highs with the stock price, but it's gone down. And usually by the time you hear about something, it's too late. You don't want to buy high and end up selling lower, right? So, So you can never try to play. You should never try to play or time the market like that. What you should do is, dollar cost average in, right, and make sure that you have a smart approach. And maybe you want a portfolio that has some NVIDIA stock,
but not necessarily. You don't want it all there. You want to make sure that you have that risk balance. And for those out there that think that they can time it and they can trade the market, I would argue with you about that, because anymore you're not trading against human intelligence. No. A lot of this trade is automated, and it's bots that can look at those if-then scenarios and pull the trigger and make those trades faster than you can even read the number.
In fractions of a second. Yeah.
Right.
Yeah. That's why people like, Warren Buffett, the Oracle of Omaha, one of the probably smartest and greatest investors of all time, said, it's not timing the market, it's time in the market. And that's what he always says. And so, if that guy, the owner and a guy who runs Berkshire Hathaway, called the Oracle of Omaha, if he says that, and he said nobody has a crystal ball, you shouldn't try to time the market, I would think that's probably a wise.
It's a pretty good hint that you're not going to be able to do that. And I have a tremendous amount of respect for the people who diligently study and know the market. I have a sub-agent who works for me who is very successful in trading his own account.
Sure.
But he only trades in a few key stocks because, he's like, there's no way that you can know everything about everything. And so he's got the stocks that he's specialized in, and that's what he's building part of his portfolio on, not all of it.
Yeah, you can't put all your eggs in one basket.
You can't. And that's why a financial advisor that offers you a balanced approach with some money that is going to have either some protection against downside with a buffered index or some sort of structured note, as well as some money that is going to grow in the market where we know what's going on and can try to hedge against inflation. I mean, we are still not down to the 2% inflation.
Right.
And in fact, inflation's ticking up again a little bit. So, for me to tell you that you need to put all of your money in the bank and keep it in a safe place or in some sort of fixed product would also not be prudent.
Right.
Because you will lose your purchasing power as inflation continues to increase. And like I can't remember if I mentioned this on the last podcast or if it was in a webinar that I just did, even though the nominal inflation rate is somewhere between 3 and 4% ish right now, food cost inflation is actually 6 to 7%.
It's much higher. Yeah.
Housing inflation.
Healthcare inflation is always higher. Yeah. I remember one year my healthcare insurance went up 20%.
Yeah.
And they're like, inflation's only, at that time, inflation was like 2.5%, I'm like, no,
Yeah.
not if you're buying groceries or paying for healthcare insurance. That's
right. Or putting gas in your car the last few
and
weeks.
that can go up. That goes up and down. Yeah.
It
yeah,
does.
and it has nothing. Inflation really, the energy prices can go way up and inflation can be going way down and vice versa. Gas could drop to $1 a gallon and we're at 14% inflation. It can happen.
True.
Yeah.
Right.
Gas is, if OPEC decides they want to raise the price and limit supply, and then they drive the prices up by, so they just says, we're going to stop making it for a while.
Yeah.
It's like, okay.
Or if we have any conflict that jeopardizes production or shipping of production.
Yes. Yep.
The market responds.
Yep.
Lately it seems like the market has been, as my other agent put it, buying on, what did he say? Buying on rumor, selling on news.
Yeah, exactly. Rumor and news, which if you listen to the news, the sky is always falling, right?
Yes.
I mean, yeah.
It is.
Tragedy sells. The bad news sells.
And I think there ought to be a rule that they tell one feel-good story for every story that makes us shake our head and cry.
Yeah, there is one of the networks. Yeah, there's one of the networks where it's the national nightly news, and I think it's CBS, that my wife and I always like, because at the end, their final story is always positive, really uplifting. Mm-hmm. But yeah, they save that last 4-minute segment or 5-minute segment of the hour-long or 3-minute segment for a really good story, but the rest is all terrible. So
yeah, but and it's what you focus on, and that's why when you're looking at putting your retirement investments together, you're not designed to be an expert in everything. Tony, you're an expert in making me look good on a podcast and making other people look good on the radio. My mom is a really good accountant. I have a friend who's a really good attorney. If you're not an investment professional and it's not your hobby, I mean, it's okay to ask for help.
Yeah.
When you have something going on with your house, unless you are the consummate do-it-yourselfer, you hire a plumber, you hire an electrician, you hire an expert to come in and help. And that's where we come in, because, some people might have so little put away for retirement that they have no choice but to be 100% in the market, because they need that money to grow as much as possible, but it needs to grow responsibly.
Yes.
Because it's a small nest egg. And, no matter what size your nest egg is, it matters to you.
Right.
And it should matter to the people that are helping you.
Yeah, it should. But you shouldn't try to go it alone, because you might make costly mistakes. And so finding the right balance for your personal situation, you can't do what your neighbor did, or your brother did, or your sister did, or a friend at work, a coworker. Everybody's situation is different. So if they said this worked really well for us, or your grandparents say, yeah, we did this and it was great. Well, everybody's situation is different. You're in a different financial.
I mean, I have the tale of two clients where I have two people who worked for the government in similar departments, similar time periods, similar compensation throughout their careers. Okay. One kept his money in the G fund in TSP. The other kept it primarily in the C fund. Okay. The C fund emulates the S&P 500 index, for those of you who aren't federal employees. The client who kept his money in the C fund had over 4 times what the client who was in the G fund had.
Yep. Not surprising.
And, very similar career tracks, very similar contribution amounts, very, almost parallel lives. So, it's about working with somebody that can help you. The earlier on in your career that we can help you make those course corrections, the better off we all are, because the smaller the correction needs to be.
Yeah, and the more money you'll help them save in the long run.
We hope so. That's kind of what we're here for.
Yeah, exactly. Well, if our listeners out there, Barb, want to get a second opinion on where they're at or make sure their plan is right and they're properly allocated, really what we've been talking about today is asset allocation, where all this money you've been building up and saving, and whether it's a 401k, IRA, your own personal investments, even looking at what you're going to have in Social Security, it's all for when you stop working and need to create your own paycheck.
Right.
But where is all that money, and how it's allocated now will make a world of difference. And so you can help them with that, right?
Yep. We can help you figure out what kind of safe money you need, what kind of what I call fun money you need, because hopefully we've gotten you to the point where you retire, that you're retiring to something, not just retiring from a job, but that you've got plans, and that we start creating that bucket of money that is the bucket list bucket, where you can go out and do the things that you've wanted to do that you haven't had the time to do. But we also know that we've got that safer money set aside as that cushion, so that we know if the market takes a tumble, you've got a soft place to land with that.
Yeah.
To give that money, that other money, time to recover. That's, we work very hard with all of our clients to structure things so that it makes the most sense for them and works that way.
Yeah. Yeah, that's awesome. So for our listeners out there, let them know how they can get a hold of you to set up that consultation.
All right. They can always go to our website, anchoryourretirement.com, and that will take you to a website that will not only give you a contact form to reach out to us, but I believe has an archive of all the different shows that we've done. Yep. If you want to listen to a different topic or listen again, they're all there. And you can always call us at area code 913-553-6222. and reach out to our appointments and scheduling team, and they will be glad to set you up with a complimentary consultation where we can take a look at stuff and help you figure out the good, the bad, the ugly about where you are on your path to retirement.
Excellent. Well, thank you, Barb. Great show today. Great topic.
Thank you, Tony. And tell Milo I said thank you for him making that cameo appearance.
I will. Yeah, he's up somewhere sleeping again now, I'm sure. He sleeps about 22 hours a day. So
most cats do.
So when he's awake, it's priority time. He's got
yes.
Yeah, you got to hold him when he asks for it. So, okay, well, Barb, great show today. Great topic. I'll tell Milo. Milo says goodbye to everyone. So thanks, Barb. And that does it for today's episode of Anchor Your Retirement with our host, Barbara Gulin.
We'll see you soon.
Thank you for listening to Anchor Your Retirement. Don't pay too much for taxes or retire without a sound retirement plan. For more information, please contact Barb Gulin at Safe Harbor Financial Planning Group. Call 913-553-6222 or visit them online at anchoryourretirement.com.
Advisory services are offered through Safe Harbor Financial Planning Group, LLC, a registered investment advisor in the state of Kansas. All matters discussed during the show are for informational purposes only. Each individual situation may vary, and the opinions expressed here may not apply to everyone. Materials presented are believed to be from reliable sources, and no representations can be made as to its accuracy. All ideas and information should be discussed in detail with one of our qualified representatives prior to implementation. We are not affiliated with or endorsed by the Social Security Administration, the Federal Medicare Program, or any other government agency. Calling this number will direct you to a licensed sales agent.